All right, today we are digging into a really unique investment at the heart of the green energy boom, Citicore Energy REIT Corporation, or CREIT for short. We're going to unpack their business model, look at the huge market forces behind them, and break down the core investment thesis that really put them on our radar. Let's get right into it.
Look, it's a question every single forward-thinking investor is asking right now. We all see this massive shift to renewable energy happening. It's one of the biggest infrastructure projects of our lifetime. But how do you get a piece of the action? Do you try to pick winning solar panel companies? Gamble on complicated energy markets? Or is there a simpler, more fundamental way to invest in this huge shift?
Well, the answer is actually incredibly simple, and that's what makes it so powerful. CREIT's whole model sidesteps the complexities of actually producing energy. Instead, they focus on the one asset you can't do without: the land underneath all those solar panels. They are, quite literally, the landlord for the green energy transition in the Philippines. It's a real estate investment in a technology revolution.
So, to really get the full picture, we're going to walk through 5 key areas. We'll start with the massive market opportunity, then dive into their rock-solid business model, look at the hard financial numbers, see their clear path to future growth, and finally, touch on how this investment combines profit with a real sense of purpose.
Okay, first things first, let's look at the big picture. You know, every great investment story starts with a powerful market trend. And for CREIT, that trend is the Philippines' absolutely massive and growing need for more power.
And the scale of this opportunity is, well, it's just staggering. This isn't just some market forecast. This is official government policy. The Philippine Energy Plan requires a huge shift to renewables, calling for something like 58 gigawatts of new solar capacity. Now, to put that into perspective, just 1 gigawatt can power hundreds of thousands of homes. We are talking about a colossal build-out of infrastructure, and every single one of those solar panels needs a piece of land to sit on.
So, you have this huge opportunity, right? But how does CREIT actually turn that into a stable, investable business? Well, it all comes down to a model that's built for both safety and growth. And this is where it gets really interesting for an investor.
So, what exactly is a REIT? If you're not familiar, just think of it as a way to invest in a basket of properties that generate income, just like buying a stock. But in this case, the properties are plots of land leased out to solar farms. And CREIT isn't just another company in this space. They are the trailblazers, the very first and the biggest renewable energy REIT in the entire country.
Now, at the heart of their model is this really clever 2-part revenue stream. Step 1 is the foundation, a guaranteed base lease. This gives them stable, predictable rent payments over the long term, exactly the kind of steady cash flow investors love. But step 2, that's where it gets really exciting. They also get a variable share based on how well the solar farm does. So when those plants generate more electricity, CREIT's revenue goes up too. You get bond-like stability with stock-like upside potential. It's a fantastic combination.
Okay, a great model on paper is one thing, but does it actually deliver? Let's get into the numbers and see the proof.
Now, this number, 98.3%, might seem a little technical, but it is absolutely critical. It's the average plant availability rate. It tells you that the solar farms on CREIT's land are not just working, they are running exceptionally well. High availability means consistent power generation, and that means reliable rent checks and a healthier variable income stream for CREIT. It's proof of quality.
And you can see that operational excellence flowing right down to the bottom line. Let's just walk through this. You see rental income growing steadily from 1.79 billion to 1.88 billion pesos. That's the stability of those leases at work. And that consistent revenue drives net income, which you can see is also climbing. For you, the shareholder, that translates into stable and growing earnings per share. This isn't theory. This is the model firing on all cylinders.
That stability is fantastic. It's the bedrock. But if you're a savvy investor, you're always asking the next question. Okay, where's the future growth going to come from? Well, CREIT has a very, very clear answer.
The growth engine is basically built in. See, CREIT is the dedicated REIT for the Citicore Group, which is a major renewable energy developer. As its parent company, Citicore, pushes towards its goal of 1.5 new gigawatts of solar capacity, it creates this huge, ready-made pipeline of new land assets. So as the developer grows, it's constantly feeding new income-producing properties straight to CREIT. It's a reliable recipe for future expansion. And the strategy to capture this growth is really focused. It's all about finding the perfect raw material, large areas of land with great sun exposure, located strategically close to the existing power grid. These aren't just random fields. They are carefully chosen spots that are set to become valuable, income-generating assets for decades to come.
And listen, this isn't just some plan on a whiteboard. They are actively doing this right now. Take a look at these recent acquisitions. In Batangas, they've locked down over 500 hectares for a massive project that's planned to generate over 500 megawatts of power. You can see similar huge projects being set up in Pampanga and Pangasinan. This is real, tangible proof that the growth pipeline is already in motion.
All right, let's talk about the final pillar, and it's one that's becoming more and more important to investors. This isn't just about the financial returns, it's about an investment that aligns up your capital with a clear, positive impact on the world. Beyond just the financials, CREIT is doing some really innovative stuff on the ground. Take their agro-solar initiative. They're creating a system where high-value crops can be grown right there among the solar panels. It's a way for clean energy and food production to literally exist on the same piece of land, which creates new jobs for local farmers and makes the land that much more productive. It's a win-win.
And the environmental impact here is massive. We're talking about an estimated 7 million tons of CO2 emissions being reduced over the lifetime of the solar plants on CREIT's properties. So as an investor, your money is directly funding a significant, measurable cut in greenhouse gases.
So, let's boil it all down. The core investment thesis here really rests on three simple things. First, you get stability from that predictable two-part lease structure. Second, you get growth from a clear, built-in pipeline of new land acquisitions. And third, you get impact, knowing your capital is backing the largest renewable energy landlord in the Philippines and helping build a cleaner future.
And that really leaves us with one final thought. In this era that's going to be defined by the shift to clean energy, there will be winners and losers. New technologies will come and go, but through all of that, one thing is going to remain absolutely constant: the need for the land where all this new infrastructure gets built. So the question for an investor is, what is the true value of owning the very foundation of that transition?